It is Friday, the 26th of July, 2019. Hope you had a good week in the markets. The market certainly participated with a lot of new all-time highs here. So let's take a look at the charts and make sense of it all. The S&P 500 had a good day here and week. It was and closed at a new all-time high. We came into this week just a little bit cautious because we were below the 5-day moving average, but the market did kind of what we wanted it to do, which was to get back above that 5-day moving average and then continue to move higher. I don't get bearish when the market is below the 5-day moving average. I get cautious and look for further evidence that maybe the market will break down. And we spoke about the trend line in here as well as the volume weighted average price levels. They all held and the market continued to move higher as trending markets will do. People will continually talk about, the advanced decline line isn't maybe confirming. Well, stick with the advancing stocks. Forget about the declining stocks. We're in a bull market. Forget about the volume. Only price pays. Manage risk. That is first and foremost in your job as trader or even as an investor. The NASDAQ also at a new all-time high. It continues to ride this rising 20-day moving average. We were a little bit cautious in here coming into the week as well, but the buyers regained control. And again, here we are at all-time highs, and there's nothing bearish about that. Depending on your time frame, maybe you want to have a stop under 193. Maybe your stop is at 190, or perhaps your stop is way down below the 50-day moving average. I focus on short to intermediate term time frame, meaning swing trades at Alpha Trends, and those are the stocks I talk about each and every day. I had mentioned in a midday video that we had gotten involved in MOBL right here earlier this week, and got involved in FSLY right here this week, and Ballard Power, which hasn't really done anything yet, so maybe you want to keep an eye on that one. But Ballard Power has a nice looking longer term chart, as does Stratasys, SSYS. If you look at the longer term chart here, this stock has done almost nothing for about 4 years, and here it is now showing positive strength here on the daily time frame. I'd say that if you get involved in here for an investment, you could have your stop as tight as 26.5 and still maybe be able to hold for something longer term where it gets back up towards 40 or so. I don't make investment suggestions. I look at swing trades, and this week we also saw positive action finally from the Russell 2000. Now the Russell's been very choppy, and it broken down below that 5-day moving average. Well, we saw on Wednesday really, that it had ramped up. I had cautioned subscribers, we don't want to chase. We don't want to buy it on that break higher when it's extended. Instead, we wanted to see it pull back down towards the 5-day moving average. And then today we got long in this area. Right now, from a swing trade perspective, a stop is here at about 155. Let's go back to the daily time frame, because this shows now we have a rising 50-day moving average. That's what we were looking for. We've also got a rising 20-day moving average, and now next week getting back above 158, I think you've probably got a pretty quick shot up towards 160.75. And if it doesn't get there, no problem. That's what stops are for, and we raise our stop along the way as we make higher highs and higher lows. That's the point of swing trading and any type of trading that you're doing, is to manage the risk. The semiconductors have had a phenomenal run here lately, and they made it to new all-time highs this week, getting a little bit extended here, obviously, and it's starting to pull back a little bit the last 2 days, which is a good thing to see. I think that you got to let these semiconductors settle down a little bit before you can consider them as a new purchase. It's definitely too far stretched up here to be making new purchases. The biotech still trying to hang around that 50-day moving average, but we're below the 50-day moving average. We're below the 200-day moving average. We're below the year-to-date volume-weighted average price. That's that thick blue line. And we're below the volume-weighted average price from the December low. That's the thick green line. I think for biotechs, I wouldn't go near these things on the long side until it got above and held above 107, 108. That would indicate that maybe the buyers are getting back involved. But for now, just stay away from those guys. They're trouble. Financials are doing what we wanted to see them do. We've been talking about this trend line break and then rallying up maybe towards this 29 level and then backing away. We're closing in on the 29 level, so be aware of that. Some people will call this a breakout and chase it. The point is, though, it's already had a great run, and having, buying on a so-called breakout after a big rally usually sets up the market for some profit taking. Right now, a swing trade stop going just underneath Thursday's low is the proper place. It remains a volatile environment for individual stocks due to the fact that we're in earnings season, and it's dependent upon each individual stock. Amazon, for instance, got hit here a little bit today on earnings, whereas Google rallied, and Twitter had a great day as well on their earnings. So those, Twitter in particular will be a good stock to keep an eye on here over the next several weeks for a lower risk entry point. I don't think you want to buy after a day like we saw today. But that'll do it. Have a good weekend, and I'll talk to you next week. Thanks.